want to tie it into the news of the day, which is sort of politics and not being able to get a stimulus passed and losing the $600 a week tomorrow for those that need the extended employment. How do you see that impacting your business in the back half of the year?
Yeah, so, obviously challenging times around the world, challenging times in the United States as the virus gets worse and worse. And so for the back half of the year, the way we have approached it is there are certain things that are just unknowable. And obviously we've seen a benefit to our business in the first half of the year. You see that in the results. You see that in elevated consumption. But in the back half of the year, we are, from a planning standpoint, basically planning for things to get back to normal by the fourth quarter. Now, you can agree or disagree with that, but it's an unknowable thing. We'd love to see the federal government obviously come together and help consumers in the United States as much as possible. But for us, we do everything that we can, and our mission is to provide food safely to consumers in this very challenging environment.
You talk about a return to normal. Is that normal different to the normal that we knew before?
Yeah, again, it's a great question, but it's an unknowable thing. I think there's certain things that your intuition would lead you to believe there's going to be a new normal, and a lot of the debate around, what that is going to be like continues. Elevated at-home consumption likely will continue until there's a vaccine. People are going to be less inclined to go out at the same, rates and levels that they did before. They'll be less mobile. When a vaccine does come, it will take some time to be socialized so that people feel comfortable. And so, more at-home consumption, less mobility, more working at home. We do think these will be the new normal. How you plan against that is another question.
Well, also, when you have to plan for the unpredictability of how people are going to be allocating their money, how sensitive are your products to what people are making?
Yeah, so we're not very sensitive to macroeconomic conditions. We're packaged food, we're very affordable, and we're very well known. We have brands that people have grown up with, they've been around for generations. And so in recessionary times, people often go to, brands that they trust, that they know, that they love. And so we've weathered many recessions in the past. We've got a recessionary playbook, which we've pulled out because we do expect times to continue to be difficult. And, we'll do everything we can to support our consumers around the world. And it's different as you go around the world. So affordability becomes important everywhere, but it's especially important in emerging markets. And our portfolio today in emerging markets is much more affordable than it's ever been. We look at what we call the affordability pyramid, and at the base of that pyramid are things like, noodles and household staples, which we are in markets like, Nigeria, biscuits in Brazil, all around the world. So we feel we're much more, you have a much more robust portfolio to deal with a potential recession, or in fact a recession, which is now upon us.
Are you going to change the offering? You talk about the brands and you talk about the fact that they've been around for a long time. Stock keeping units, are they going to be as many? Are they going to be different? Is your product offering going to change as a result of what you've learned?
Yes, it will. And, I would suspect that grocers around the world, right now there are less stock keeping units today than there was pre-pandemic. And that has everything to do with companies like ours, being as efficient as we possibly can so we can continue to supply food that, is in very, very high demand. So, focused around hero SKUs that sell at very high velocities. Coming out of the pandemic, I suspect that, many of those SKUs will be added back, but not nearly all of them. And so you're going to have, fewer SKUs working harder for retailers and for suppliers like us.
Can you give me some insight into what your unit labor costs look like and hiring, et cetera, in the back half of the year?
Yeah, so it's been elevated in the first half of the year, and it's been elevated because we are paying special bonuses to our people on the front lines who are showing up each and every day tirelessly, in our plants, in our distribution centers, our sales folks in the store, and as well as, sanitation, increased cleaning and things like that. In the back half of the year, we're going to do, we're planning on much the same. So rewarding our people who are, again, courageously showing up each and every day to run our plants 24/7. So we'll have elevated costs that will continue into the second half and beyond.
Steve, you talk about the fact that you don't have kind of that much exposure to the macroeconomic trends. One area that you probably do is your exposure to emerging markets, which is in some ways disproportionately higher than maybe some of your peers. What do you see there? Do the emerging market businesses, the regions that you serve, and the businesses that you have in those regions, are they likely to come back more slowly than, for instance, those you see in the United States?
Yeah, so for us, the second quarter was a pleasant surprise at how durable our emerging markets showed. And so when I say durable, one of our very big markets is Africa, and Nigeria is obviously a huge country there. We were growing at double digits pre-pandemic, and that slowed to mid-single digits, but still growing because, again, we have a very affordable portfolio of staple items, and we've got a very strong distribution business that provides staples to consumers, and so it's proved durable. In Brazil, Mexico, other markets, we actually saw elevated demand because the COVID crisis hit late, and even though there were many shops that were closed, so as much as a quarter of mom and pop shops that were closed, people still need to eat, and they get out and they get our products and they eat them at home. So we are planning a conservative stance in the back half of the year. We do know that things like oil trading where it's at, the pandemic, the recession is going to be very challenging for emerging markets, and we're planning accordingly. But we again have a robust portfolio, very strong route to market, and we believe that we'll weather the recession in emerging markets well.
I'm glad you brought up commodities, because we have seen a weaker dollar, which would be good for your business, but we've seen a lot of volatility within the commodity market. Can you raise prices to help protect margins? Do you feel like you have pricing power today?
Yeah, so we look at in its entirety revenue growth management, right? And so price is a part of that, driving the right mix, driving volume, driving everything that we possibly can to create value. But it starts with the consumer. And in a challenging environment, affordability is very important. Our margins are also important. So it's not as simple as taking list price because you have brand power, but it's really providing a price package architecture plan that works for the consumer who's under stress, that works for the retailer who is showing up each and every day in a very challenging environment to serve our consumers, and looking at what our shareholders need and what we need to drive the right type of margin improvement and margin performance over time. So it's revenue growth management capability that we've been building over the last several years, and that served us well, and we believe will continue to serve us well. And we do have very, very strong brands that are capable of driving that type of value in the marketplace while still being affordable to consumers.
Steve, one of the trends we have seen is increasing the consumer during this crisis doing their shopping online. That gives the retailers huge amounts of data. How do you capture some of that data?
Yeah, so it's a great question. And, we say this whole e-commerce online world has jumped far into the future. And so, our e-commerce penetration has doubled. And we work with a lot of different partners, a lot of different retailers on that. And so sharing the data and getting as much insight as we possibly can into shopper and consumer is important, because it allows us to create value for our retail partners as we both navigate this new environment.